Very good morning, students. Today we are going to learn something about final accounts. This final account, this will be coming under financial statement analysis. See, why we have to prepare final accounts and why we have to give more preference for financial statement analysis. So before going for final accounts, we should know why we have to give more preference for financial statement analysis. See, imagine you are running a private limited company or public company. Okay, so once you start your company has to be registered under Companies Act 1956, and if everything is perfect, if you want to run your company, finance play a major and important role. See, for example, if you want to run a company, you need minimum 5 crore rupees. As of now, you are having 2 crore rupees, that is savings from your packet. Then remaining 3 crore rupees, if you maintain your financial statement perfectly, automatically you will get more investors. Okay, automatically you will get more investors, that will be in the form of shareholders as well as bondholders. So this is very important. See, not only you have to think about how to tally balance sheet, asset side as well as liability side, we should know the reason why we have to give more preference, why we have to prepare this effectively means for investors' point of view. Imagine that if your company's financial statement is perfect, automatically you will get more investors. Okay, if your financial statement is perfect, your company's goodwill will increase. So you will get more investors. Okay. So we are going to learn something about final accounts. Basically, final accounts have major 3 parts. One is trading account, second one is profit and loss account, third one is balance sheet. I repeat once again. Final accounts has major 3 parts. One is trading account, second one is profit and loss account, third one is balance sheet. See, this is the format trading account. You have debit side, you have credit side. See, format we have to follow. That is very important. So before explaining what is trading account, let me explain the format what you have to do. Debit side, credit side, particulars amount. Okay. Why we have to prepare trading account? The reason why we have to prepare trading account means we should know our company's gross profit or gross loss. I repeat once again, listen carefully. Why we have to prepare trading account? We should know our company's gross profit or gross loss. For this reason, we have to prepare trading account. You can ask another question. How to prepare trading account? Okay, now this is a common doubt will happen for all the students. Okay, so debit side you have to input all the expenses. So debit side you have to input all the expenses. Credit side you have to input all the income. So here you will be having some doubt. Expense means what? Income means what type of income you have to input. Okay, see, generally for trading account, you have to input direct expenses in debit side. Credit side, you have to input indirect income. Again, some confusion will happen. Sir, I have completed B.Tech Computer Science. I have completed B.Tech Mechanical Engineering. I have completed BSc Maths. How can I classify direct expenses, indirect expenses, direct income, indirect income? So these types of confusion will happen for all the students. I will tell you some shortcut how you can classify the expenses. Especially for trading account, you just input all the expenses which is related to your factory. So imagine that you are running a manufacturing company. Your company is manufacturing sugar. You have separate factory, you have separate office. So whatever the expenses that happens in factory, you just input all the expenses in debit side. Okay, credit side you have to input all indirect incomes. Let me give one simple example so that you can easily understand. First one is opening stock. Okay, see for example, so here opening stock means for manufacturing purpose, your company or your production manager, he would have purchased some raw materials, okay, or some other product for manufacturing purpose. That you have to, that will be coming under opening stock. Second one is purchase. For company's purpose, for manufacturing purpose, you have purchased some raw material or you have purchased whatever it is, that will be coming under trading account debit side. Then next entry is purchase return. Okay, as per the format, actual purchase account minus purchase return, you will get actual purchase. I repeat once again, okay, because some of the engineering students frequently they ask this now. Sir, if purchase comes under debit side, why don't we input purchase return in credit side? Because if purchase return happens, we have to get money from our suppliers, right? So according to trading account format, we have to give the actual purchase. So purchase minus purchase return. For example, 3 lakh minus 10,000, 2 lakh 90,000 will be the actual purchase. Okay. Next one, wages. So one important thing what we have to follow for accounts debit side, whatever the entry that you are going to write, you have to add prefix as to. That is very important. Format we have to follow. Okay, we always give more preference for format. Heading. Suppose you are preparing trading account for your company name should be there. For example, trading account, trading and profit and loss account for Vivek's Limited on 31st March 2021. The format is very important, and you have to mention the debit symbol as well as credit symbol. That is very important. Okay, so wages. So maybe in your factories, so many people they would have worked. You have to give wages. Then carriage inward. This is one type of transportation expenses that basically will happen. Then freight on purchase. So maybe for your company's manufacturing activity, you would have purchased the raw material from some other states or some other country. So you have to bring the product from other state or other country. You need some mode of transportation that will be coming under freight on purchase. Okay, I repeat once again. Trading account, debit side, you have to input all the expenses which is related to your production activity. Simply we can call it as factory related activity. Then you have credit side. So credit side you have to input income, sales. For example, 4,50,000 minus sales return 20,000. Like purchase minus purchase return, we have to follow sales minus sales return. You have to give the actual sales. Okay, this is the format we have to follow. You have to always showcase the actual sales. So sales minus sales return. Okay, then finally you have to find out whether your company has received gross profit or gross loss. Okay, let me tell you a simple way how you can do the calculation part. For example, trading account, debit side, the total value is 10 rupee. It means expenses. Credit side, the total value is 15 rupees. So 15 minus 10, the 5 rupees positive value, you can call it as gross profit. Sometimes your company may get gross profit. Sometimes your company may get gross loss. For example, debit side, your total value is 20 rupees, and credit side, your total value is 18 rupees. So expense is 20, income is 18, 20 minus 18, the 2 rupee, you can call it as gross loss. Okay. So next one is profit and loss account. Why we have to prepare profit and loss account? The simple reason is we should know our company's net profit or net loss. The reason why we have to prepare profit and loss account is we should know our company's net profit as well as net loss. The format will be the same what we have followed for trading account. As usual, you have particulars, amount, you have debit side as well as credit side. So here I will tell you a simple technique how you can input expenses in profit and loss account. See, what are the expenses that happens in your office apart from factory? What are the expenses that happens in your factory? You just input in profit and loss account debit side. There are some expenses that I had put it in debit side. One is rent and rates, bad debts, general expenses, manager salary, advertisement. These are all some simple expenses I have put. Apart from that, I will tell you the list of expenses what you need to input in trading account debit side as well as profit and loss account debit side. Now you just come to credit side. So whatever the profit, gross profit that you have calculated in trading account, that you have to input in profit and loss account credit side, income side. I repeat once again. Whatever the gross profit that you have calculated in trading account debit side, that you have to input in profit and loss account credit side as an income. Then some other inputs like commission received, discount received, all this income you just input in profit and loss account credit side. Now you have to find out what is your company's net profit or net loss. Okay, again the same calculation what we did for trading account. Suppose in profit and loss account, debit side, your total value is 20 rupees and credit side, your total value is 16 rupees. Sorry, debit side 20 rupees, credit side 25 rupees. So 25 minus 20, the 5 rupees we can call it as net profit. If income is higher than expenses, you will get net profit. If expense are higher than income, you will get net loss. Very simple. So before going for balance sheet, I will tell you some of the expenses that you have to concentrate for trading account debit side as well as profit and loss account debit side. Just note it down. This will really helpful to you. First, I will tell you the list of expenses that will be coming under trading account debit side. As usual, opening stock, purchase, minus purchase return, wages, carriage inwards, fuel and power. So maybe for example, if your production managers has purchased the fuel and power for manufacturing activity, that you have to put it in trading account, debit side. Then maybe in olden days, okay, our ancestors, if they want to run their company, especially for firing purpose, they use coal. Okay, that will be coming under trading account debit side. Then custom duty, factory rent as well as factory insurance. This will be coming under trading account debit side. Then work manager salary. This will be coming under trading account debit side. Profit and loss account debit side. Some of the additional expenses I will tell you for your reference. One is debit side, gross loss plus advertisement expenses, carriage outward, bank charges, salary, rent and rates, some stationery items, insurance. Suppose if your company have taken insurance for your employees, that will be coming under P&L account debit side. trade expenses, interest on capital, interest on loan. So these are all some expenses that will be coming under profit and loss account, debit side. Okay. The next important part what we have to concentrate is balance sheet. Okay. So this is one of the major and important parts that we have to concentrate. Okay. So before going for balance sheet, let me explain what is meant by balance sheet and why we have to prepare balance sheet. See, basically balance sheet has two major components. One is liability, second one is asset. Okay. What is meant by liability? See, for example, for business purpose, if you borrow money from banks or any finance company, that your company has to repay. The repay amount we can call it as liability. One example I will tell you. Suppose you are running a company, you are getting loan from ICICI Bank around 10 lakh for 3 years. So your company's liability for ICICI Bank is that particular amount. Okay. Liabilities have been classified into two major components. One is short-term liability, second one is long-term liability. Short-term liability means within 1 year you have to repay the amount. For example, some of the short-term liabilities are bills payable, bank overdraft. So these are all something that will be coming under short-term liability. Long-term liability means more than 1 year. For example, share capitals. Suppose if your company issued any bond, or if your company received money from ICICI Bank or HDFC Bank or some other banks for more than 1 year, that will be coming under long-term liability. Okay, liability part, it has been classified into short-term as well as long-term. Okay, the first one is capital. According to accounting point of view, here capital means its proprietor's contribution. For example, if myself and my friends, we both started a company, we have contributed some amount from our savings or any other sources, we can call it as capital. Debenture, this is like long-term liability. This is a legal agreement between company and investors. For example, my company issued some debentures. One debenture value is, for example, 10,000 rupees. Okay. If you deposit my company's debenture, my company will give interest benefit. When compared to bank, when compared to post office, when compared to finance company, my company will give more interest to you. It's a legal document, long-term liability. Then reserve fund. Again, see, if you want to prove you are a good entrepreneur, you have to save amount from profit. That is very important, because see, future we don't know what will happen. See, not only for some aspect your business will come down. Nowadays, especially for this 2022, the competition world, at any point of time, definitely your company will lose your business. Definitely your company will lose your sales volume. So one of the major important aspect what you have to concentrate is savings from profit, reserve fund, bad debts provision. So maybe see, for example, due to any situation, if your company is not able to get money from suppliers or some other party, the bad debts will come. Okay, so this I will explain while taking, elaborately I will explain while taking with adjustment. Then creditors, bank overdraft, some short-term liabilities. So liability, all the whatever the amount that your company has to pay to outsiders, that will be coming under liability. Then asset part, one of the major important aspects what we have to focus is asset. Okay, asset has been classified into so many parts. One is current asset, fixed asset, tangible asset, intangible asset. There are so many classifications will be there. current asset means easily converted into cash. Within 1 year, you have to get receivables from outsiders or your client or your suppliers, etc. Then fixed asset, then goodwill. These all will be coming under asset side. So asset, you have sundry debtors, receivables, investment. Sometimes in case if your company has invested in any other investment, okay, that will be coming under asset side. Cash in hand, goodwill, the most valuable intangible asset, goodwill. Furnitures, then closing stock. Closing stock, that will be coming under asset side. That is very, very important. Then finally you are checking the total value for both asset as well as liability side. You are checking the total value, liability side as well as asset side. Okay, so what we have discussed till now is what is trading account, the basic. Okay, what is trading account, what is profit and loss account, what is balance sheet. The format we have discussed. Trading account, we have debit and credit side. Profit and loss account, we will be having debit and credit side. Balance sheet, we will be having debit and side. Liability as well as asset side. The format we have discussed and how you can input the entry in debit and credit side, both trading account as well as profit and loss account. By the way, we have discussed about balance sheet, some basic liability as well as asset entries. Okay, so I hope the basic what we have discussed for final accounts you will understand. In case if you need any further doubt or clarification, please feel free to ask. Thank you, students. Okay, so as of now I have given few inputs regarding balance sheet. Okay, see what you have seen is very less number of entries that will be there in liability as well as asset side. See, some of the important components I will tell you, just note it down, this will really helpful for your examination. First, balance sheet, liability side. The format is capital plus net profit. See, for example, if your capital is 10 rupee and if your net profit is 4 rupees, 10 plus 4 you have to mention. Capital plus net profit minus drawings. So before going for drawings, let me explain what is meant by drawings. Drawings means proprietor's personal purpose, he can withdraw few amount from capital, we can call it as drawings. Why company gave preference for proprietor? Because he has invested full amount his company for company's growth and development. So capital plus net profit minus drawings plus interest on capital. In case if any income tax is there, that you have to reduce. Then sundry creditors. Sundry creditors, this will be coming under short term liability. See, for example, your company is manufacturing company, you are manufacturing sugar. For you the major raw material is sugar cane. You will be having two regular suppliers. Each and every month they supply the raw materials. For example, the total cost is 1 lakh. Okay, your company gave 80,000 instead of 1 lakh. So remaining 20,000 you are asking your suppliers for 25 days. So the short term liability, sundry creditors, 20,000, your company has to pay the amount to the suppliers. Then bills payable, short term liability, bank overdraft, it means your company is getting very short term loan from banks. You are getting short term loan from banks. For example, 20 days or 25 days or 30 days, that will be in the form of bank overdraft. Then outstanding expenses. So listen carefully. For all the outstanding expenses that will be coming under liability side. Then loan from bank. You are getting loan from ICICI Bank or City Union Bank or HDFC Bank or whatever it is. If you get loan from bank or any private finance company for more than 1 year or less than 1 year, that will be coming under liability side. Then bond. Okay, you are issuing bond to your regular employees or some common people. Suppose for example, you want to increase your, suppose you need more money to run your business. Okay, already I told that if you want to run the company, it has to be registered under Companies Act 1956 and the government has gives some permission to raise the fund with the help of bond. It is a legal agreement between your company as well as investors. For example, you are fixing one bond value as 10,000 rupees. By the same time, your company gives interest as 10%. Suppose if you invest that amount in bank or finance company, you will not get 10% as interest. Suppose if you invest that amount in post office, hardly you will get interest as 7% to 7.3%. So your company is telling to investors, if you invest my company's bond, your company gives interest as 10%, long-term liability. Then reserve fund, already I told that reserve and surplus. If you want to grow, you are a very good entrepreneur, savings play a major and important role. See, for example, the COVID situation, you would have seen different companies, their sales volume has come down. By the same time, if you run a company, you have to pay interest to bank as well as your investors if you borrow money. So, once your company get profit, you have to concentrate savings. That will be the form of, generally we can call it as reserve fund or reserve and surplus, retained earnings, whatever it is. Then income received in advance. So once again I repeat, what are the entries that will be coming in liability side? Capital plus net profit plus interest on drawings. You have to add interest on capital. In case if any income tax, if you have paid, minus income tax, sundry creditors, bills payable, bank overdraft, outstanding expenses, loan from bank, debentures, reserve fund, income received in advance. Liability, you will be having only two major classification. One is short-term liability, second one is long-term liability. So what is meant by short-term liability? Within 1 year, you have to repay all your payables. Long-term liability means more than 1 year. This is for accounting point of view. I will tell you some of the entry that will be coming under asset side. See, what you have seen is very few entries. Just note it down. Okay. Cash in hand, cash at bank, sundry debtors, investment, some marketable securities, bills, receivables, prepaid expenses, machinery, building, land, furniture and fittings, motor car, then goodwill, patent, trademark, some preliminary expenses. Finally, you have to add profit and loss account, net loss, closing stock. So this will be coming under asset side. Okay, then finally you have to check the final value both liability and asset side. Suppose if your liability value is 2,12,000 and if your total asset value is 2,15,000, it means somewhere you did some mistake that you have to identify. Okay, so before posting the entry in liability and asset side, you should know the meaning of all the entries. That is very, very important. Okay, so that is what I have told. Liability will be having only two major classifications, short term as well as long term. Asset, you have a fixed asset, tangible asset, intangible asset, current asset. So these types of classification will be there for asset side. So I hope you can clearly understand what is meant by trading account, what is meant by profit and loss account, what is meant by balance sheet. So before closing the session, a small and quick recollection. Trading account we have to prepare because we should know your company's gross profit as well as gross loss. While we have to prepare profit and loss account, we should know what is your company's net profit as well as net loss. Finally, as a proprietor, we should know your company's complete liability part as well as asset part. That is very, very important. See, especially in balance sheet, we give more weightage for liability part because your company has to pay money to outsiders. That will be in the form of bank or some private finance company or shareholders or bondholders or whatever it is. We have to give more preference for liability part. Before borrowing money from all these people, you have to be very careful. Okay, so with this, I am planning to close the session. I hope you know something about what is trading about, profit and loss account, balance sheet. Thank you, students. Thank you.